Good morning, everyone. Welcome to the Trading Market Technicals morning call video for Friday, May the 3rd. Markets had a big reversal day yesterday, took back all of its losses from Wednesday on a decent jobs number. We had unemployment, initial jobless claims came out, and they were better than expected, so the markets pushed higher and liked it. We ended up on the day green across the board, Dow 126, gold up 13 on that rebound, which continues, S&P up 14, NASDAQ up 41. Okay, so where do we go from here? Well, today is the non-farm payroll numbers where everybody is anticipating. And like I mentioned a few days ago, there really wasn't much excitement around that number when usually it is. And I'm surprised that we haven't had much more volatility than we had after the numbers came out. So I'm going to be watching closely. I think personally that it's a tough read, because if the numbers are bad, QE will continue. If the numbers are good, that means that the market's chugging along nicely. So it's a real tough read. I would not be looking to position myself in front of that number. I'd like to see it come out and then let the markets pick a direction and then trade accordingly during the trading day. So be interested to see how that number comes out. But nonetheless, I want to go right into the charts. Again, it's not much. Nothing really has changed, and I just want to show you here. Here's the NYMO. We're still in this neutral sort of territory here. We are creeping a little bit higher. There has been a little bit up and down, but if you really want to start, if you want to take a good shot at a short, you really want to see the NYMO really up at these levels here. So really what it's telling us that, again, we can go up higher and we can actually sell off before being overbought and or oversold on this indicator. Most of the daily indicators and the momentum indicators are telling us that we are overbought. Yes, we are definitely stretched. There's no two ways about it. But if, like I said before, if the markets, you don't think the markets can get up to 1625, 1615 area, think again. We're right there. And that's why I feel that the markets probably are looking to touch the 1600 and then kind of reevaluate it from there. I do think it's crazy. I think it's nonsense. But again, that's not what I think. What I'm looking for. It's just a matter of price. Price is what pays us, and that's what we'll continue to monitor. We take the best trade setups and the best ideas, and that's how you get paid, not by your opinion. So please make sure you realize that. As much as I feel the market should not be up at these levels, can't fight the Fed, and that's really the bottom line here. Okay, so here's a NYMO. Let me show you the VIX, and as I always look at this, and I say, wow, no volatility at all. We're really holding at these 8-year lows here. I mean, it's really pretty amazing how, again, no fear in the markets. Markets continue, dips continue to be bought, and that's what's going to happen and continue to happen until there's some sort of a catalyst to sell this market. We ended up closing bullish on the CBOE put call. And I just wanted to show you the stocks above the 50-day moving average. And again, I keep showing this to you. Just want to show you that mostly the stocks are, other than a few stocks that are some big cap tech, a lot of these stocks aren't moving. As you can see here, stocks above the 50-day moving average. And again, we are in this descending triangle, but we're still making lower lows and lower highs. So that, to me, is a big concern. But again, guys, if you're day trading, it's just something to keep in the back of your mind. Really not a concern for you. But for the swing trader and the long-term investor, you really have to keep in mind that, we are at these lofty levels. I mean, look at this since November. This is just crazy. And if you see here, you do have some symmetry, right? Look, December all the way up, several months from November all the way up until October. From May all the way to October, then we had from November all the way up again now until April. So this is quite extended, and I think that a pullback is definitely imminent, and I do see a 6 to 8% correction down the road. But again, it's not what I think. It's just what I'm looking for, and I see all these red flags out here. That's why I am not holding anything overnight, nor would I position myself for any type of trade overnight as well. Okay, so now let's take a look at the dollar. Dollar had a huge day yesterday, big day up, and the ECB had actually cut rates yesterday, and look what happened to the euro. Euro actually fell really out of bed. Now, it was interesting to see what happens with the dollar, right? Usually, when we have risk on, risk off, we have that inversely correlated effect where euro would rise, stock market would rise, dollar would sell off. So now we have the euro selling off, and we have the dollar rising again, right? So we have this, just to show you this area here with a big green engulfing candle here is white, but nonetheless you get my picture. It is green, and there's a hollow candle which is positive. So it'll be interesting to see what happens with the market. Does the dollar decouple from its relationship of its inversely correlated to equities? That could easily happen. I mentioned that back a couple of months ago. So be interested to see how the dollar reacts to a risk on, risk off type trade. So we'll just keep monitoring that for the moment. All right, so let's go into the charts. So we have the SPY. And as you can see here, we did take back that reversal day. And again, it seems to be the picture, right? We have 9 days up, 10 days up, 1 day down, and then we take it right back again. And we have this here. If you look at this little move up, we had 1 or 2 small little days, and we had a move up. Then we had another big down day, and then we had 5 days up. We had 2 days down, which is really the most of the rally here was taken back. So this is the biggest sell-off of 2013. Right here, three days down, and not even consecutive. We had 1 day down, 1 day up, and then 2 days down, and then followed by 9, 10 days up. So you could just see how well bid up this market is, and I don't think it's going away anytime soon unless there's some sort of a catalyst or some type of geopolitical event that's happening or something that comes out of Europe. So again, guys, as frustrating as it is, you just have to realize this is what the cards are dealt with the market, and we have to change or adapt to the market and what the markets are doing in order for us to make money on a consistent basis. So here's the 60-minute. Now we are just about to null and void this head and shoulders pattern here. We're right there. Probably today it could be a deciding factor either way, today or tomorrow. Today or Monday. We'll see what happens here. But again, we have now recovered all of this move lower, and now we're sitting here at the highs, which is bullish nonetheless. So nothing wrong with this pattern at all. This pattern here, this bearish pattern, more than likely will probably be negated today. I just don't see the market selling off, good or bad, on non-farm payrolls, because any good news has been good news, really, right? And any bad news has been good news. So it really doesn't matter. I think we had pretty much of a terrible earnings season where a lot of companies are beating top line, missing bottom line, and reducing guidance. That's really the big kicker here, reducing their guidance, and the markets continue to go up. I just don't see the markets moving this high, this much more higher anyway. My guess is 16, 10, 6, low 1600s, and then you would really have to reevaluate. I mean, it would be just so enticing to look to start getting short at those levels. And I don't know, and I'm really considering something like that in the next couple of weeks. We'll see what happens here. But S&P Spider 30-minute, as you can see here, just the same thing. That 153.75 is going to be key support area, and we're going to really need to break that lower to really negate any more follow through to the upside here. Okay, and that's the 30-minute chart. Lagging, one of our leaders is the Russell. They have been lagging for quite some time, as you can see here, since March. We've been really just stuck on this sideways consolidation, again, at the upper end of the channel. So we really need to see this continue to break out higher and really start leading here. So this is a laggard, another red flag. And then we have our transports really haven't gone anywhere for the last 2 months, at least the last month of April, beginning of May. Again, as you can see, they are lagging the S&P and the Dow. And here's the Dow. Actually, again, back at its highs, and we still could actually make this as an M formation, right? An M top. So we have a lower high off this high here. Hey, if you want to call it a double top, the same thing if you want. I'm looking for to see either a retest of these highs, and then we'll see what happens here, and then we'll see if the Dow has legs to move higher along with the S&P. And Goldman, and now Goldman here definitely triggered this bear flag. As you can see here, I mentioned yesterday, we did touch this right to the penny, to 50% retrace, and we're now making lower highs off of these highs here, as you can see in red. We did get a recovery rally yesterday, but again, Goldman is definitely lagging the market. Another red flag for the markets in general. LinkedIn came out last night with earnings. They beat earnings, but again, they lowered their guidance expectations. So again, not too good. They got hit after hours, down about 20 at one point, I believe. Recovered ever so slightly just to close on its lows in the after hours. So we'll see what happens. Well, I mean, it really is, again, it all depends on what the markets, how they react. It's not the number, it's how they react to the numbers. Same thing with the economic data coming out. If they react negatively, then just follow suit. If they react positively, you got to look to buy pullbacks. And again, I keep stating this, you can't look to buy weakness, sell strength in if you're day trading for 6.5 hours. You just don't have enough time to do that, and that's why I always say stick with what the trend is for the day. You'll get paid by, instead of looking to fade anything, unless it's been stretched 3-4 days up and then a big gap up over a green bar, then it's a possibility that's a recipe for a fade. But nonetheless, if you're looking to buy weakness on a stock, more than likely that stock would continue to be weak for pretty much most of the day. So just a quick heads up. All right, guys, and here's the XLF. As you can see, kind of holding in at the upper end of the range. Again, bullish, and in this broadening top within a big bearish rising wedge. Again, only bearish if we break this lower trend line. So nothing wrong with this picture at all for the moment. And we have Apple. Apple did manage to eke out a gain, but I think Apple is pretty much done here. Maybe another, even if we rally today, I don't see much more movement. You have 8 days extended from the 386 to 445. That's a pretty big move, guys. So if you're long Apple anywhere in here, look to either tighten your stops or start looking to take profits at some certain key resistance areas. We are at one right now at the 440, 445 area. So just a word of caution here. I do think Apple does roll back at least into the 420 and then reevaluate. If Apple can hold the 420 area here, then I think this bearish pattern probably would be negated, because then we'd actually start taking the head out and start actually moving back up to the 500. If we lose the 420, then you're going to get that test that 384. The target on his head and shoulders is 363 right now. Doesn't say you have to get there, right? We're not looking for this is just a pattern. We could get to the 370, 380, and might not even get there. Who knows? But right now, we're going into seasonal weakness in technology, and of course, Apple really not going to come out with any new products, new development going into, I believe it's the end of the third quarter, beginning of the fourth quarter. So it's pretty much going to be just, like I said, a day trading stock. And lastly is the Qs. Qs had a nice big follow through. Technology has been doing really, really well. I was looking for more of a little bit of a pullback here into here to get long technology before we had a little blast off. But obviously, again, markets does what it wants to do, and we had a big blast off here. So again, good with technology, but again, coming into some seasonal weakness. So just a quick heads up if you do trade technology stocks. All right, guys, that's really pretty much it. Let's see what happens with non-farm payrolls. It's going to be really interesting to see how they interpret the number today. So be on your toes, be alert. And I pretty much, right after the numbers, I'd say you have till about 11 o'clock, and then that's pretty much it. So, be aware if you're making some decent money for the morning, 11, 11:30, 12 o'clock, turn off your computers, go play golf. It's probably the best thing to do coming into the summer months. And Fridays, even in the winter, really has been just terrible trading. All right, guys, have a great day. Have a great weekend, and we'll see you on Monday.